Right, hoping that we've sorted out our technical issues. Let's start the conversation now with Dr. Mahmoud Hassan. Thank you so much for sticking around with me, Dr. Hassan. So let's start with you giving us highlights of this CBN Financial Stability Report, which we're expecting to be released soon.
All right, thank you very much. Like I started, the Financial Stability Report, appraises development in the economy, giving reference to global developments, domestic macroeconomic environment, and also what happens in the financial sector. The report is a fallout of the recent trend, global trend, in appraising macroeconomic development linked to financial system stability via the macroprudential approach. This approach is kind of celebrated globally by central banks now following the global financial crisis, where we've come to realize that exogenous factors outside the financial system substantially affect developments in the financial system. And by that way, if provisions are not made for those exogenous shocks, you find that vulnerabilities in the financial systems translates to other sectors of the economy. The report, which is the end 2015, that is the second half of 2015 edition, narrates developments in the global economy, both the macroeconomic developments and the financial developments. This includes developments in the US. We've seen recent trends in interest rate hikes in the US, the normalization that is going on. You find that will lead to capital reversals for the Nigerian economy as investments flow out of Nigeria to that economy. That has impact for the reserve position, for our exchange rate, because of the demand pressures of pulling out those resources. We also have development in the international financial system. And this also includes developments in the Eurozone areas. We have seen monetary expansions in the Eurozone area. Growth is also kind of subdued in those areas, even in the developed economies. The global growth is actually reduced to about 3.1% now, of which emerging and developing economies are actually driving this growth, because growth in the advanced and China and other economies, frontier economies, is nosediving. So we will see that will also impact on developments in the domestic economy. The report also looked at what is happening within the Nigerian financial systems, trends in credit, which sectors are the credits going to, what are the volume of the credit, how efficient is the asset structures of the banks, what is the capital structures of the bank, what are we doing in respect of our own supervisions and surveillances, are also discussed in that report. We also looked at the emerging risks, vulnerabilities that are in the system, and also stress test those risks. In the event that certain scenarios are simulated and certain events happen or are likely to happen, what would be the resilient level of the Nigerian financial system? In essence, the central bank mandate is to ensure, even though the primary mandate is price stability, low inflations, and stable prices, we also have the critical mandate of ensuring financial system stability. And these financial system stabilities entail the ability of the financial system to resist external shocks and sustain its mandate of financial intermediations and allocating credits to the various sectors of the economy. The report also looked at payment system infrastructure, the BVN issues, the issues with fraud in the banking system, the automated system, the data management, and the NIPS and all the stuff. And it also had an outlook of what is the likely trend of events in the global economy.
But
it's important to emphasize that the report also has a section on the stress test, which is part of the macroprudential surveillance approach that is being used in appraising the financial system. The stress test is a simulation process of where scenarios are created. The likelihood of their occurring in some cases are remote, but it allows for a conservative kind of precautionary measures to be taken by both the regulatory authorities and the operators in the financial system. So it's like you have a string, and then you try to pull the string. Where are the weakest links in the string? Invariably, under normal circumstances, maybe the string will not need to be pulled at that strength. So we have shocks that we introduce into the system, and these shocks will tell, can the system withstand this kind of shocks, given the indicators we looked at. The Financial Stability Report is
Well, Dr. Hassan, if you can hear me, thank you so much for giving us that executive summary of what to expect from that report. But could you also highlight if there were any scenarios mentioned in that report with regards currency management? That's what a lot of people would really like to know. What is the stance of the central bank right now with regards currency management?
Yeah, the scenarios that I was just trying to get into looked at how will the financial soundness indicators behave if those scenarios crystallize. And the indicators that we looked at are both at the asset-based indicators, capital-based indicators, income and expense-based indicators. The asset-based indicators that we looked at are actually the ratio of asset, that is the regulatory asset to risk-weight asset, or tier 1 asset to risk-weight asset. And you look at the capital adequacy ratio of the bank. Let me give one example. If you looked at like credit, one of the emerging risks I will find in the system are credit default risk. And this is not unconnected to the global development, both in the global economy and the domestic economy, where you see inflation is already going up. You have demand, forex demand pressures. You have depletions of the reserve. You have government revenue going down. You have government fiscal crunch that is going on. You have defaults in states being able to meet their overhead expenses. These nodes dive into because the banks are exposed to these sectors. So if you do a scenario test, that assuming there's an increase in NPL, non-performing loan, by 100%. In the report, we have an NPL of 5%. That has increased now. But assuming you have an NPL increase of 100%, what will happen to the banks? And that result shows that even if you have an NPL increasing by 100%, that is from 5% now to 10%, you find that we have 4 categories of the banks pairing. We have the large banks, we have the medium banks, we have the small banks, and then you have the industry-wide the appraisal. For the industry, you see that all the banks still maintain their are still having a capital adequacy ratio above the 15% threshold. For the industry, it's actually 10%. We're still recording like 17% CAR, even with a 100% increase in NPL. For the large banks, we still have a CAR of above 15%. For the medium bank and the small bank, the same trend. For the small bank, actually rose to about 17% also. The threshold there is 10%. So the summary of it is that there is still resilience, substantial resilience in the financial system. Indeed, there are deteriorating aggregates coming up, indicators coming up, and these challenges are still trending. And the bank is also taking precautionary measures by allowing for dynamic provisionings and also asking the banks to create appropriate buffers, capital buffers, to cushion this kind of effects.
Dr. Hassan, we'll take a quick break now, catch our breath, and come back and continue this conversation. Please stay with us. You're watching Business Morning on Channels Television. The conversation with Dr. Mahmoud Hassan continues after now. Welcome back. Concluding moments now with Dr. Mahmoud Hassan, who is the head macro-prudential financial policy regulations of the Department of the Central Bank of Nigeria. His live to us from our Abuja studios. Thank you so much, Dr. Hassan, for sticking around and also for giving us a very comprehensive expectation of what we should be waiting for with regards to this particular report. Now, in light of the developments and all of the issues that you've actually mentioned and what we're supposed to expect in that particular report, what's your projection for the financial system?
Yeah, thank you very much. Yeah, the projections are like stated in the outlook of the financial report are the fact that, yeah, there are deteriorations in the system, there are declines in asset quality, there are, shrinks in capital buffers for banks, but invariably the summary for the industry is the fact that the system is still very sound, the resilience parameters are still very good, the numbers are still above the regulatory threshold. This does not mean that we don't have kind of outliers, single cases of banks that may have one or two thresholds being failed. But overall, that is relating it to financial system stability. The system is sound. There's adequate resilience to any kind of shock that comes in. I give you an example of 100% NPL. Also, another critical issue that is trending is the credit concentration. We all know what is going on in the oil sector, and we know that 25% or so of credit to that sector, banks are exposed to about 25% of credit to that sector. And even in the stress test, if that crystallizes, those 25% go from, let's say, substandard to doubtful, the banks can still maintain their thresholds, and then be able to do their normal banking activities and still sustain the financial system stability. Invariably, I'm saying that we don't have much to fear for now, but we need to take very high precautions because the dynamics are really changing fast. And the global developments are also influencing substantially what is going on in the Nigerian economy. The recent oil prices, domestic increase in fuel price, the US statistics that I just gave you, all these are going to affect our domestic economy. So we still need to, take precautions and still hold on to the surveillance, risk-based surveillance system of the Central Bank of Nigeria.
Well, Dr. Hassan, just before I let you go, when will this report be released?
The report is already released, so it's going to be on the banknet as I speak with you.
All right, thank you so much, Dr. Hassan.
The analysts should be cautious in the interpretation of the numbers, particularly in the stress test scenarios. These are simulations, these are likelihood events, and there are sometimes adverse scenarios. It's not possible for NPL to move within half a year for 100%. So these are extreme analysis we do. So people don't just pick those numbers and say, oh, central bank said 7 banks are going to go under if this happens. These are likely scenarios. But on the baseline scenario, that is what is on ground now, we are fine.
Thank you so much, Dr. Hassan, for joining us on the program and shedding more light on that report. Of course, we'll have more on that report later on Business Incorporated, so you can tune in and get more details on that particular report. That is a financial stability report from the Central Bank of Nigeria. And he says that the scenarios are not actualities, it's just in the eventuality that it happens. The financial system is really pretty sound.